Hi traders, this is Anganga Forex and Happy New Year. So this is our weekly overview on United States dollar and Japanese yen. I'll just try as much as possible to just make a summary, so it shouldn't take as much of the time. So I'll center much on the technical side and not the fundamental part of it. So to begin with, this is our US dollar and Japanese yen chart, and I already had to sketch some few stuff. I didn't want to sketch them while I'm explaining, so I can at least not make the video long. So what I'm looking at for next week is I'm seeing a bullish move on United States dollar and Japanese yen. I'm going bullish. The reason behind is that I'll start from last year. Last year, in our last quarter, right? That's October, November, December. Let me take my crows. Let me take my crows. You can see on the last quarter, starting 1st October, that is, we had this spike up over here, and whenever there's a spike up like this in the market, first of all, it signals us that a big order has been placed. And as we all know, that the market, the big players, the ones that move the market, is the big banks, right? So these big banks don't trade like we do, like going on the market, entering with the 0.5 lot size, even if it's like 50 lot size. No, they pump in a lot of cash, they invest a lot of money, and they jump in with big lot sizes. That is why you and me, even if we can place an order on the market with 1,000 lot size, but we cannot even be able to create a wick in the market. But the banks, because they pump in a lot of money, they go in the market with a huge amount of lot sizes, even up to like 1 million lot size. So the market responds to that. So like you can see over here, 1st October, there was a purchase by one of the big banks. The order was placed and the market had to spike up. Like you can see like bullish candles consecutively going up, and we even had a gap over here. I think that was a Friday, and then a weekend come Monday it continued going bullish, and this whole quarter it's been bullish until it even finished over here on 31 December. So there was a buy order by the banks, the market going up. And what happens when you buy? You have to close your order, right? And the banks too, they close their orders. So come January, on my side, I only traded NFP. Actually, like whenever a year is just starting, because of the holiday and everything, the market usually starts to run mid-January. Most, for the record, let me say, you can back test and see, but like the market starts to have volatility, or let me say proper action starts to happen mid January, sort of. So come mid January, that was like a Monday, we see the market went up, breaking this previous structure over here, which it's a signal of a continuation of a bullish move, and it broke this as well, which to most traders is like they were seeing this as a resistance, let me say, and then it got broke over here, coming to test the which now is a support, that is. But unfortunately the market went down, reacted coming down over here. So as you can see, the market drastically went down. The reason behind that order here for the last quarter, it was closed. So they closed their order, and whenever the banks close their order, because they pumped in a lot of cash, the lot size was big. Maybe let me say they were like I mentioned, like 1 million lot size. Now they close a big order like that, the market is weakened. That's when we have the retracement. So the order was closed, the market went down, retraced until this area over here, and now it's starting to spike back up. Like new orders are being placed. Here there's a high volume. So I can't detail much on this because it's about the volume and shit, because it's gonna take even more time and all that. So come Monday, what I'm anticipating is the market maybe to react on this breaker broke, or just to do a little drama there and then come back in this zone and then react from here, and or another order being placed, because the bank doesn't just place like a single order. Like if you want to go in with, for example, let's say 2 million lot size, maybe they may pump in here 1 million, and then the market goes down and maybe pump in 500 lot size, and then it goes up, and then here you can see there's this small order block. I can say, if we can go to the smaller time frame, let's say 4 hours, there's this order block over here inside our high volume area, right? So the market may come and react over here and then continue to go up. Like I spoke about this structure that got broken. This is a very varied one, because when the market went up from this zone over here, right, when it got over here, it came down and it failed to break this area. You know, a break of structure rules. The market, a valid break is not by the wick of the candle but the body. So the body, if you can see closely, the body did not break this previous body over here. It was the wick, and it was just reacting on this last candle over here, and then it spiked up, going up. So come Monday, I'll actually drop this in our Telegram group, and so we can make use of it together. So that's actually that on United States dollar and Japanese yen. So have a great weekend. See you next week. Don't forget to like and subscribe. That's gonna put some motivation to keep putting out some variable information. And may there be an equation, you can give me a shout on Telegram or on WhatsApp. So peace. Have a great one.